please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome. You've joined us on Business Lunch. I'm Nisha Podar and with me is Mangalam Malu. Mangalam, good afternoon. Such a nice screen as far as the green is concerned. And second day in a row that I've got the color right, Mangalam. So it's really near the high point of the day when it comes to the markets and in good shape. Currently, it's raining outside and a lot of pressure on the markets is also let off, especially coming in from the RBI's projections going forward. It's the mid-cap universe which is doing well, and Bank Nifty is the one which is really outperforming. So 4 stocks advancing to 1 declining. So market breadth also looking extremely strong at lunch hour.
Absolutely. When it rains, it pours, and it is pouring happiness as we speak across the breadth of our markets as well. 5 stocks in the green for 1 in the red. Remember, it is the Nifty Bank weekly options expiry as well, so we'll keep an eye out on a couple of strikes there. But for the Nifty itself, remember, yesterday we saw a lot of writing at the 10,600 put. As the markets move higher, the Nifty has hit a century today, hit the 10,800 mark for the first time in 16 sessions. We're seeing further writing in the 10,700 put, so bears gaining some confidence out there, indicating that maybe 10,600 could be a strong support for our markets. 10,700 call writers are packing their bags and covering some positions out there. And as far as the Nifty Bank is concerned, in yesterday's trading session, the maximum open interest was 26,500. Now that has been taken out. 27,000 call is the next port where the bears are placing their bets. So we have a good 250-point upside from here is what the options data is indicating. And at the lower end, 26,700 puts are something that the bears are writing, bulls are writing rather, right now, indicating that 26,700, which is about 35 points from here, is a strong support. Green on the global screen as well. The European markets have opened well, and there is a century on the Dow futures indicating that there would be some more gains at the open on Wall Street today. So let's talk about some other opinion coming in as well.
Oh yes, our opinion's very important, even though today the markets are looking extremely strong, but we have been in a zone of volatility and emerging markets are wobbly but are not in a bear territory. That's the word coming in from Chief Global Strategist of Morgan Stanley, Ruchir Sharma. In an exclusive conversation with CNBC, he discusses the sell-off in the emerging markets and why he thinks there are still investment opportunities available.
In terms of emerging markets, have already had a lost decade, because if you look at it from where emerging markets are today compared to a decade ago, emerging markets are still about 10–20% lower in dollar terms. I'm talking about equity markets in general. The US stock market since then, as we know, is up about 70% or something since it was where it was a decade ago. So I think that emerging markets have done a lot of the workout in terms of the excesses that they had. And that's why we've had this underperformance. So I don't think that this is the start of a new bear market in emerging markets. If you look at the previous bull markets in emerging markets, it was perfectly natural to get these kind of wobbles in the first year or two. So I still feel that there's plenty of opportunity available in emerging markets. A lot of the excesses have been cleaned out. Now, of course, there are pockets which are there of concern. We typically find that, that in terms of crises or bounce back in financial markets, it's the locals who know better than the foreigners do. The foreigners are usually last in terms of getting into a market and getting out of a market. And that's the issue with Turkey too, that foreigners have been buying into the Turkish market for the last couple of years, and the local people have been exiting. So last year, 12% of the Turkish millionaire base actually fled the country. Now that's a really staggering number, and the only country in the world where the numbers were similar was Venezuela. So it just tells you what's going on.
Well, while the equity markets are closer to the high point of the day, just keep an eye out on the fixed income markets as well. The 10-year bond yields hit 7.96, a near 2.5-year high. Lata gets in more details. Lata, bond, the RBI bond.
Yes, the day after the bond markets are seeing all the red there is in the policy. In the first place, the policy could be neutral in its stance, but it's still hiked. And in a global environment where the Fed is expected to hike 2 or 3 times, I don't think any bond market is safe. Everyone has to fall in step, and therefore you know that it's only a matter of time before that stance changes and there is withdrawal of accommodation as a stance. along with more rate hikes. Second, the sheer liquidity. In the first place, the Reserve Bank refused to give any assurance or explanation on whether they will do any open market operations and why they will do it. That's another sore point for the market. And then the rules itself, when you tweak the LCR rules, the liquidity coverage ratio rule, basically you're telling some of the banks your existing G-Secs will qualify for liquidity. So they will not buy additional G-Secs. To that extent as well, demand for G-Secs goes down a little bit less. Then there are the state bonds. What did the RBI say yesterday? Until now, state bonds were regularly being valued 25 basis over the Government of India securities. Now, that's not always correct because some states are good and some states are bad. So now they will be valued according to their market acceptance. That means all the state loans are going to have higher yields. They won't get that support which they had so far from the rules. Now, if state loan yields go higher, then people are attracted there and not attracted to government securities. To that extent, government security yields also will have to play catch up. And then, of course, the government is widely expected to borrow more. Anyway, the borrowing calendar is skewed towards the second half this year, which is a very bad thing to do. And over and above that, in an election year, you can't at least borrow less. You can't cancel auctions. So all these is, going to build a case that there is really very little reason to buy bonds. They are going to get cheaper the next day after you buy them. And so the continued buyer's strike, the PSU banks not wanting to buy. I mean, why are they not wanting to buy? Because they are seeing losses in those bonds. That attitude is getting reinforced. Now, let me just put one positive that came from the market. The one-year CD has become a little better. It's trading better. So over there, there is a bit of a relief, but that is a relief for a very small pocket of the market. For the rest of the market, you are going to see bond yields going to 8%.
All right, Lata, thanks so much for that insight. A lot of experts have told us that 8% could be on the horizon. But take a look at the flashes on your screens. And one of the reports really suggests that group of ministers to review the fresh terms for Air India sale process. Remember, there were no takers for this particular government's asset, and they are likely to tweak some of those rules for accepting the bids next time around. And that may be based on the feedback that they have received from some of the interested parties. So that particular large sale has to be on top of our radar. With that, we will slip into a short breather on the show. But up next, future retail is in focus as Premji invests by 6% stake in the company. And we get you an exclusive from Kishore Biani, the CEO of the company, in a short while from now.
Just keep an eye out on the frontline indices at the high point of the day. The Sensex doing a Brian Charles Lara out there with a 400 run, hat doffing close to the 400 mark. In fact, during the break, hit the 405 mark out there. And adding to the sheen, we have the metals index. That one should come up for you at the high point of the day. Our ticker team has been alerting us. Tata Steel is at the high point of the day. Along with that, we have Vedanta too, which has moved to the high point of the day. Hindustan Unilever, the stock was already in the green. The company held an analyst meet yesterday. So brokerages were fairly positive on the future course of action that the company is going to take. That stock too has moved to the high point of the day. And since we're talking so much cricket, well, how can we forget Gale? That one's hitting a decent knock at the high point of the day as well. So looking good for the market. So let's get in on some M&A deals. CNBC TV18 has been tracking one of the biggest M&A deals brewing in the insurance space. As the deal gets one step close to getting done, we understand that the sellers want more for their asset. Yash, which are the companies that we're talking about and how much more do they want?
Well, Mangalam, if you remember, it's been a while since the binding bids for IDBI Federal Life were submitted by the two potential buyers. And now, after all that time, now we are given to understand that the sellers, essentially IDBI Bank and Federal Bank, have sought and laid down more conditions for this particular stake sale. What we are given to understand is that the potential buyers in the deal are essentially seeking a bank assurance, an exclusive bank assurance term for 10 years. And now to essentially accommodate this particular requirement from the two buyers, which is Max Life as well as Aditya Birla Sun Life, IDBI Bank and Federal Bank have said that they would seek a premium over the bid amount or the bids which were submitted by these two buyers at the start of the transaction. Here we are given to understand that the first buyer, which is Max Financial Services, is not very keen to pay that premium amount over the bid, but the second buyer, which is Aditya Birla Sun Life, is very keen on it, and essentially there is no certainty on the kind of business which will come from that that bank assurance channel, and that's why Aditya Birla Sun Life has proposed that they will be paying this premium over the bid amount depending every year on the kind of business which they get from the bank assurance channel. For now, for this particular deal to go through, Aditya Birla Sun Life has proposed that they will issue redeemable debentures and which will be converted every year depending on the kind of business which they get from the bank assurance partnership.
Okay, that's a large transaction, and Yash has all the exclusive details and blow-by-blow account of what's really happening in that particular contest. Let's take a look at one particular stock in focus with the huge amount of, transaction on that particular counter is Future Retail. The stock is trading at 569 rupees per share, has let go of some bit of gains in the market, but still above the price at which the transaction happened. Now, Kishore Biyani, the CEO of Future Retail, in an exclusive chat with CNBC TV 18 confirmed that Premji Invest has bought 6% stake in the company from Bharti in a block deal today. Let's hear him out.
Sidar is a Bharti family, Mittal family-owned entity, which held around 9.3% in Future Retail. They have sold 6% of stake to Premji Invest.
Okay.
And Premji Invest is one of the larger investors in the consumer space in India. They are also investors with us in Future Lifestyle Fashion. And we believe they are long-term investors and will play a good role with us in building up our business to another level. So
this 6% which has been sold to Premji Invest, I mean, what's the total value of the transaction?
I think it should be around 1,500 to 1,600 crores.
15 to 1,600 crores. And you're saying out of that, 475 crores comes to Future.
I think the value would be around 1,700.
1,700, okay, 1,700 crores. And out of that, 475 crores comes to...
575.
575 comes to Future Retail.
Yeah.
Okay. And...
Today, there was a block of just 6% which Premji Trust has bought. But the remaining 3% is an arrangement that the promoters themselves will buy?
We don't have any arrangements of buying. I think we can... there is no sense of urgency of selling any stock at this moment from anybody.
All right, so that was Kishore Biyani. Let's move on. Then Quality. That is the stock on our radar. The board, remember, is set to meet on June 20th to mull buyback and bonus issue. Earlier, we spoke with Ruchir Sharma, the president and head of business at Quality, to get his sense of the buyback contours as well as concerns regarding the stock price. Answers weren't very convincing. The stock at the low point of the day while the markets are at the high point of the day.
We are very strongly adhering to certain compliance frameworks. So it is not a good idea to talk the contours of the framework as of now, because everything is under discussion. So the formal proposal will be put up against the board on 20th of June. And after that, definitely we'll share everything with you. It was a fraud which happened, and the relevant company was also barred by stock exchanges, right? It is all there in media as well as in print, right? So this clearly establishes the fact that we suffered because of certain things. What is happening in the stock market, yes, it's a matter of huge concern. Ultimately, what matters is the business. If business model is robust, right, and that is doing good, we are very confident very soon you will see a marked increase in the stock price also.
All right, so that's the Quality management giving us some clarifications. It's time to slip into a short breather on the show. But up next, starting today, we kickstart a new series, Hunting for Value. Find out which stock is on our radar today. Stay tuned to CNBC TV 18. Now, from today, we are starting a new segment and, more importantly, a new endeavor to find, analyze and also present stock ideas which have lost much of their value from the peak levels.
Could these stocks now find a favor once again? Well, we kickstart this series called Hunting for Value by putting the spotlight on Dilip Buildcon. Anisha is here with the findings. Anisha, over to you.
Well, the investors of Dilip Buildcon had certainly hit the expressway when it comes to wealth creation, because remember, the stock listed at the level of 240 rupees back in August 2016, and since then zoomed away to around 1250 rupee mark in May 18. But since then, it seems to have hit a roadblock because the stock is down about 30% from the high point. Now, of course, the stock got added to the ASM list just earlier this month, and that was the reason the stock was seeing lower circuit of 5% in the initial days. But other than that as as well, there have been a lot of speculations around this particular counter. Remember, after the results, there were some speculations that the company has some issues with the auditors, and the sudden resignation of the CFO also did nothing to really assuage the investors. Added to that, there were a lot of questions asked regarding the Shrem deal that the company had signed to sell off its BOT assets and the capability of Shrem Group as a whole to pay off the outstanding dues for the acquisition amount. Also, the analysts are questioning if the company has bitten more than they can chew, because remember, the order book has sizably grown, but there are constraints when it comes to the balance sheet as well as the management bandwidth as well. But what have the management done to really assuage all these concerns? Well, they have come up with a lot of clarifications. First up, they say that they're looking at the top line of around 10,000 crores in FY19, expecting an order inflow of 18 to 20,000 odd crores. They say that they see no compression when it comes to the margins or working capital, because as per them, the working capital days have come down to 96 versus 130 that they were earlier. Also, regarding the Shrem Group deal, they mentioned that they've already got around 600 crore rupees and they're expecting more inflows to happen as and when the deal progresses. On the auditor front, what they did is that they came out with a statement from the auditors itself suggesting that there is no clash or disharmony between the auditors as well as company, and that they're continuing as the auditors of the company. But the question is the street buying what the management is saying? Well, if you look at the brokerage calls, they are definitely buying, because I looked at the 19 brokerages, 14 out of 19 brokerages actually have a buy call on the stock. 4 of them have a hold rating, and it's only 1 that is actually giving you the advice to sell the counter. As far as the consensus target is concerned, that is around 1240, telling you that still there's an upside of around 40 to 50%. Nomura, HDFC Securities, Credit Suisse all came in favor of the company after the results. For example, Nomura said that the exaggerated down move that we saw in the stock after Q4 earnings was a bit exaggerated. They're not too concerned about the margin profile as well. HDFC Securities says that they have no concerns regarding management bandwidth, and also they believe that the company would not need any further equity or debt to maintain their working capital and carry out the projects. Credit Suisse also recently upgraded the stock just a couple of days ago. So clearly the brokerages are positive, but the key really lies in terms of the valuation and how it stacks against the peers, because that has been really the undoing for the mid-cap market. Now, if you look at the valuation chart that is up for you, it is actually the Dilip stock that is available cheapest after the recent correction at 15 times FY19 earnings. Now, the likes of Sadbhav, PNC as well as KNR will give you a return, is trading at around 20-25 times the forward earnings, but their PAT and revenue growth has been the range of 10 to 20 times, 10 to 20%. Even if you look at the order book position, it is Dilip that has the highest order book position, giving it a stronger revenue visibility. But that is what all the brokerages have to say. I think perhaps the street is a bit nervous regarding the auditor concerns that have been raised and the recent movements in stocks like Manpas and Vakrangi that we have seen. So perhaps the street would want to be a bit more sure-footed when it comes to a stock like that, but the brokerages are pretty sanguine on the stock. Back to you.
Right, Anisha, thanks a lot for that. Of course, standard disclaimer, this is not a recommendation from CNBC TV 18, just some proprietary research put out by Anisha. With that, we'll move to the next one. The monsoon, that one's hit Mumbai, and the entire country is expected to be covered by June 10th. Here's from a private forecast agency, SkyMet, on the forecast and rain progress for the day.
Hi, this is Fawzia. Welcome to SkyMet Weather. Monsoon is expected to advance over Maharashtra, including Mumbai, during the next 24 hours. Our trough is running from Chhattisgarh across Vidarbha, along with a circulation over Madhya Maharashtra, which will give good rains over Madhya Maharashtra, Konkan and Goa, Vidarbha. Isolated heavy rains also cannot be ruled out over these areas. Light rains may also occur over Chhattisgarh and East Madhya Pradesh, while at the same time Gujarat and Rajasthan will remain dry. In northern parts, a cyclonic circulation can be seen over Punjab and a trough is running across Haryana and Uttar Pradesh. This will give isolated dust storm or thunderstorm over Punjab, Delhi, Haryana, West Uttar Pradesh and North Rajasthan. Talking about east and northeast, good rains are expected over Nagaland, Manipur, Mizoram and Tripura. Scattered light rains may also occur over West Bengal, Jharkhand and Bihar. Coastal Odisha may see moderate showers. Coming to southern parts, a trough is extending along the west coast up to Kerala and a circulation is over coastal Andhra Pradesh. Thus, moderate rains are expected over Telangana, including Hyderabad. Rains will increase over coastal Karnataka, while showers will remain light over Kerala and Tamil Nadu. That's all for now. For accurate weather forecast, stay tuned to SkyMetWeather.com.
All right, it's raining outside and it's raining gains for the markets as well. Nifty at the high point of the day above 10,800 level. But with that, it's a wrap on Business Lunch. Mid-cap radar is coming up next.